Good day, empowered investors. Greetings from Poland. I had to escape the heat of Croatia after our super yacht event ended on Saturday, and I came up north, literally choosing the only direct flight. I just thought if I can get a direct flight from Split to anywhere that I want to go up north, I'm going to take it. And so I just took a chance. And this may be a lesson in taking a chance in life. And I booked a flight to a town I had literally never heard of, Lublin, Poland. Okay. And I've been to Poland many times, love Poland. It's a great place. But I booked this flight because it was a direct flight and it was only 69 euros. You can't beat that deal, right? But it's funny because by the time I upgraded to their version of business class, it was 75 euros more. So the price more than doubled. But that's the way it goes. Anyway, I landed and I thought, what have I done? This is just weird. But once I got to my beautiful hotel and walked outside after showering and changing my clothes, I was so impressed with this charming little town, population about 380,000, and really just impressed. I'm telling you, folks, sometimes in life, just take a chance on things. You'll be so pleasantly surprised. And so many times on this trip, I have been pleasantly surprised. This is the longest trip I've ever taken in my life. I've been traveling for really about 3 months now. So it's really a new paradigm for me, but it's been really fun, really interesting, and very, very educational. I've been looking at real estate on this trip. I've been talking with people in the real estate industry, and it's just fascinating. Haven't reported on the direct points of that too much because really I haven't had much to say about it. It's pretty much status quo that I've reported on prior shows over many, many years about real estate. You know, things in terms of real estate don't change too darn much in Europe. And probably a lot of countries could say that. Again, as I've talked about many times before, the United States has an extremely dynamic and special, in many ways, real estate market. But you really should join our Empowered Investor Pro program. It is less than the cost of a gym membership, and the value is dramatically higher. Look, you can get fitness outside of the gym, and you might be better off for it if you live in a place with good weather and you're outside, because going outdoors does so much more for you in so many other ways. Anyway, use that money to join Empowered Investor Pro and grow your financial wealth and grow your control and your peace of mind. It's not just about money. But first, I want to just mention again about our bias as humans. It's just weird because I'm constantly seeing things online on social media from people talking about the real estate market, waiting for the correction. They've been waiting for that for, 16 years now, right? And it hasn't happened. They've been so wrong, and everything's gone the complete opposite way. And they're still waiting for this big correction. And one of the big bias problems that we have as humans, by the way, it'd be a really good idea to go to Wikipedia or just type in a general search engine. I mean, don't Google it because they're so evil, but DuckDuckGo it or something like that, Bing it, use other evil companies instead of the big evil company, and search cognitive bias, right? And realize all of these different biases we have that influence our thinking on stuff, because it's really dangerous. Well, the one I want to talk about today, just for a moment, is about how people seem to think that because real estate prices and mortgage payments were somewhere lower in the past, they somehow think that they have to revert to the norm, to the past. They have to revert to the past. And that is simply not true. It is not even close to true. I mean, why do people think this? I think they think it because they just want to be nostalgic, because they missed out, because they didn't have the self-confidence to invest when they should have in the past. Now they sit around as keyboard warriors, bashing everybody else and spewing these predictions of doom and gloom and crash and how housing is so overpriced, which they're not wrong about that, by the way, that it is expensive. But just understand, and I'm not saying this is a prediction. I'm just saying it could happen. It may well happen. I don't know. Nobody knows the future, right? But real estate could become a permanently much higher priced asset than it is now, and certainly than it has been in the past. So watch out, folks, for these biases that make you possibly think that you're just waiting for the correction. And as you are, your wealth is just getting eroded by inflation, by taxes, and you are not getting the multidimensional benefits of income property. Okay, so let's take a look at this. So here is a tweet or an X, I guess it's an X, right? Thank God for Elon Musk, right? Buying the free speech platform. And this is from Colin Robertson. And the handle is MortgageTruth. It's an interesting point that Colin makes here because he says, if it's not mortgage rates, it is a lack of quality inventory, or are home prices simply too high? Nearly half of homeowners told Bankrate that they wouldn't sell this year no matter what the mortgage rate. Pretty scary to sell in this market and try to find a replacement property. This tells me the current gridlock in the housing market goes beyond the mortgage rate lock-in effect, which, by the way, of course, we've reported on ad nauseum. And his interesting point here is that it's got more dimension than just that. And so let's keep going with his post here. There's purchase price lock-in too. Existing homeowners have much smaller loan balances at very low rates. Taken together, it'd be very difficult to reconcile replacing a $400,000 loan amount at 2.75% with a $650,000 loan amount at 6.5%. The monthly principal and interest jumps from $1,633 to $4,100. Even a 3.75% rate puts them at $3,110 a month. Wow. So his point here is that it's not just about the rates, the high rates versus the low existing rates that are causing the stagnant market and the lock-in effect. It's also about the amount of equity people have. Remember, we've reported on this too extensively, that people have tappable equity of over $300,000 in their property. So America is very equity rich. Okay, he goes on to say, and by the way, that's me talking. I think you can tell. Okay, and if you're watching on video, you can see his post. Okay, then you've got a catch-22 where fewer properties come on the market, which makes it even less compelling to move because there's very little selection and the prices just keep going up. How will this break outside of a distressed sales event? And that's absolutely true. And remember, as I've always said, there is one critical ingredient that you absolutely positively must have if you want to have a real estate crash or even a correction. And that is, meaning that a correction is less than a crash, right? If you define crash as maybe a 20% decline in prices, you might define correction. These are matters of opinion, right? You might define correction as a 10% reduction in prices, right? Okay, you're not going to have either of those because you've got to have millions, maybe tens of millions of distressed homeowners that become millions of distressed home sellers. And we have the complete opposite of that. We have tens of millions, maybe 100 million homeowners almost, that are extremely comfortable with their situation. And here's another chart, and I believe this one came from John. Oh, this is from Bankrate. Okay, homeowners less likely to sell due to rates. We asked, which mortgage rate, if any, would you need to be comfortable selling a home this year? And here's how they responded. A rate less than 6%. Well, 35% of the people said, okay, that's the rate we need to be comfortable. Less than 5%, 30% said that. Less than 4%, 21% said that. And a rate less than 3%, 11% said that. So it sounds like, okay, that's not terrible. Maybe if the rates went below 6%, it would cause some of the inventory in the market that's all locked up now, where people just won't sell. It would cause some of them to sell. But wait, there's more. Here is maybe the most important part of the survey, where sellers said, when asked the question, which mortgage rate, if any, would you need to be comfortable selling a home this year? So a home, I guess that means it applies to owner occupants, and it applies to investors. In other words, would they want to sell? Well, guess what? A whopping 42%, almost half of all the homeowners, said that there is no rate that would make them comfortable selling their property. Wow. If you are waiting for a price adjustment, if you are waiting for better housing affordability, be scared, because housing may be a permanently, and when I say permanent, nothing's really permanent, but for a long time, may become an even less and less affordable asset. You think affordability is bad now? Many people say it will only get worse. Now, granted, lower rates will help affordability, but as soon as those rates go down, you see some of this inventory might loosen. Most of it won't. People won't sell no matter what, because they're locked in for the multiple reasons. They've got the lock-in effect. And it's just going to make homes more affordable, causing more buyer demand, causing prices to rise. So it's a catch-22. It's a really tough situation as far as housing affordability. Okay, we've got a breaking story here, and this is about another podcaster in my same business. And I have told you for 21 years, commandment number 3 of my 10 commandments of successful investing is thou shalt maintain control. And this person, Marco Santarelli, who, by the way, full disclosure, I do not think this is a good person or a good character. Okay, that's just my personal opinion, because he has stolen a lot of my material over the years. And in fact, we have had many podcast listeners come to me and say, Jason, this guy is copying you. He just copies you almost verbatim. And I've heard it myself. I mean, I listened and he would say literally the same words as I would say, okay? And then during that big case that I had a few years ago, where I won that $56 million judgment that I reported on before, we did a whole show on this, look it up. And Marco Santarelli actually ganged up on me with this competitor who was trying to ruin my reputation to gain market share. So now he has started a fund a couple of years ago. I don't know exactly when he started this fund. And all of these people have come to me asking about it, and there's a bunch of reviews on the podcast. And so here's what they say. Again, I don't know a lot of the details. They're very murky, but I'm sure more will come out. So I'll just share with you what the reports say. But folks, this is why you want to be a direct investor. You want to control the things that you invest in. Many people have asked me over the years to be on the show, to promote their fund. And, you know, I just am really just cautious about that, because I don't have control. I've basically said to them, look, unless you're going to let me run it, because I know I'm honest. Okay. I'm not promoting your thing when you're in control. Okay. So this is from Trey Cruttenden, who wrote this review. It's a 1-star review, 1 out of 5, saying scam and Ponzi scheme. And this is about the Passive Real Estate Investing podcast. And by the way, I think that name in and of itself is very misleading, because I've told you for 21 years that there's no such thing as a passive investment, not even a bank account. Okay. But semantics, maybe. Okay. The review says complete scam and Ponzi scheme. Don't believe me? Question mark. Ask around and check Reddit. Go look for his podcast promising 12 to 15% returns. He pulled all of that after everyone invested and won't give anyone's money back. No communication. And yet he has time to record podcasts and ask for more money. Karma is coming. Run, run, run. That's Trey Cruttenden, who wrote that review. And then here's another review. And this is EV Ann, maybe it's Evan. That's sort of an internet way of writing Evan, possibly. It says, beware. There's 1 star. Marco took money from investors just days before he defaulted on his note fund, costing investors millions of dollars. He absolutely knew that the fund was in trouble and took people's money anyway. If he didn't know, he was totally inept. Whether his note fund turns out to be a Ponzi scheme or fraud, there is definitely some ethical and moral issues that were missed here on Marco's end. Go to Bigger Pockets and look under Neurotic Capital thread to see his true colors. So that's another review. Again, here is another one. 1 star, it says missed payments. He defaulted on promissory note, yet he's still out here trying to convince people to invest with him. Please don't fall for his lies. Business Insider 23, based in the US, 1 star, says defaulted on flagship project. Marco does not value his investors. Terrible experience working with him. 200 plus investors. Hope/pray we see our money back. Run from this man and all his investment opportunities. So, folks, look, these people invested in a fund run by Marco Santarelli. People in the real estate industry, I've heard over the years, call him Scam Torelli. And I don't know exactly what he did. I've heard a lot of things, but again, I didn't look at the Reddit. I didn't look at, any of these references they're mentioning to see more details, strictly just sharing these reviews with you. And one of the investors who was talking to me about this, who listens to the podcast, said, these funds and these people, it always takes years to find out that they're bad apples, that they're cheating people, that they're stealing, that they're mismanaging, that they're doing whatever they're doing, right? And here you go. Remember when Meet Kevin was out trying to expose Grant Cardone, and Meet Kevin and Grant Cardone both, by the way, have been on the show. You can go listen to those episodes. There was a case over that. And this investor said, I wonder if this will happen with Grant Cardone. And I don't know. I mean, Grant Cardone has raised probably hundreds of millions of dollars now from investors. Maybe he's legit. Nobody really knows. Nobody really knows, until the jig is up. I mean, you just don't know. But this looks really bad, and it looks like it affected over 200 investors. So I'm sure the story will continue to break, but I'd urge you to do your research. And number one most important thing is follow my commandment number 3 that I've been talking about for 21 years now. Thou shalt maintain control. Be a direct investor. Buy some houses and own them, control them. Yes, it's a little more responsibility, but you're not going to lose all your money like these people are saying, right? And you're in control. You know what's going on. And the best thing is to not only be a direct investor and control your own investments, but to self-manage your own properties. So you don't even have to depend on a manager. You are really, really in control. And again, many times it takes you less time, hear me clearly, to self-manage a property than it does to manage your managers. I know a lot of people don't see that until they actually do it. And that's largely what our Empowered Investor Pro community is about. It's about self-management where you're in control. So please, please take advantage of that. It'll really help you. And here, by the way, is a screenshot from Wikipedia about the anchoring bias, right? And this is really what people are doing when they think that somehow real estate mortgage payments, monthly payments, or prices will go back to the way they were. They don't have to ever go back to the way they were. Dynamics in the market have changed, and they've changed permanently. There is a huge difference in this market versus the global financial crisis, which was the worst economy we've had in really 7 or 8 decades. This is nothing like that. It's the complete opposite. I mean, look, the cost of money has tripled and housing prices have risen. They just keep going up. So inventory is definitely increasing in some markets. I mean, we're back in some markets. We're now back or almost back to pre-pandemic levels, 2019 levels. And a lot of the doomers and gloomers are saying, oh, this is the sign that the crash is happening. Nothing could be further from the truth. Here's why. I mean, many reasons, but I'll just tell you one. The one big reason for that is that 2019 was a great market. I mean, there was nothing wrong with the real estate market in 2019. Yeah, it had some dynamics. It was slowing. It wasn't as good as it was a few years earlier. But 2019 was a fine market. I mean, nobody is saying that the market had crashed in 2019. So inventory levels at the 2019 pre-pandemic levels are by no means a crash or even a correction. Okay? You've got to go back a very long way. Really, you have to go back to at least 2012 to start talking like that. Okay. And 2015, 3 years after 2012, would only give you the quote unquote normal market, right? Which 2019 was way below the normal market in terms of inventory levels. So just folks, people just don't have perspective. They don't understand the market dynamics like we do. I've been doing this all my life. This is my only career, right? Since I was 19 years old. I have a deep understanding of the way these fundamentals work. And you just really got to be careful who you listen to. And one of the things that's funny is, you can take someone to court and sue them for peddling a bad investment and for lying about the investment and misrepresenting the investment, like we were just talking about here, right? Or for a Ponzi scheme or a scam, right? But why is it that all of the folks out there who have been predicting doom and gloom and who have been wrong, who have caused millions and millions of people to miss opportunities, right? We have this bias, right? We notice the flaw, we notice the problem if we act and it doesn't work out. But we don't notice the flaw or notice the problem. And certainly we don't go out and sue somebody for making a prediction that the market will crash that caused us not to act. And that's the biggest loss we probably could encounter, is the opportunity cost of not acting. That's just the way the human bias works, right? We can't hear the dogs that don't bark. We don't pursue someone or blame someone because they caused us to miss an opportunity. We blame them and sue them or file regulatory complaints against them if we took an opportunity and then lost money, right? And that's fine. You should hold them accountable. But think about if you followed any of these doom and gloomers like Nick Girelli out there on his YouTube channel that has been talking about a crash. I mean, look, I have screenshots of all the thumbnails of his old videos, okay? Because these people are so cagey, they take them down. They take down the videos. They try to hide any evidence of their bad predictions, okay? And I'm not saying he did that. I mean, he may have. I really don't know. I haven't looked in that much detail. But I'll tell you something. The worst thing is missing an opportunity because you believed the end was coming and it didn't come and you missed out. That usually is the biggest cost of all. But we will see. Okay. One more thing I want to encourage you to do is join us on Wednesday And join us every month on the second Wednesday of the month. jasonhartman.com/Wednesday to register for that. Our Empowered Investor Pro members got a very small group private session with our guest, who will be asset protection and tax advisor JJ Childers. He's a tax advisor and attorney who's been around for many, many years, and a first time sharing his wisdom with us on Wednesday. This is totally free, so go register for our monthly Zoom meeting. Space is limited. jasonhartman.com/Wednesday, and we will look forward to seeing you there.